What's up, YouTube fam? Welcome back to the channel. In this episode, we're going to discuss how to basically sell options. In my opinion, I would say the right way at this point right now. Obviously, we've learned a lot from when we were growing the account, and now it's time to learn from when we're losing money, right? So, the problem with winning is you don't necessarily feel the need to keep sharpening your sword, right? If there's one thing I've learned about trading, it's one of those games where it's very easy to get into the trap of believing you're winning and then ultimately, thinking you know it all, thinking you don't need to, be precautious, thinking you don't need to continue educating yourself. And that's the biggest mistake you can make, because ultimately it will lead to something like this. And that's why, I'm thankful for this channel, because it really is forcing me to be accountable. Maybe in the past, I might have just gone off a, tangent and ultimately, or gone off the wall and ultimately started taking crazy trades, chasing, trying to get the money back, just doing things that are very out of character. In this case, I'm taking it slow. So, I definitely took this position fast in the sense of I freed up the capital from MSTX and I pretty much immediately got in this. Now, the whole time I was doing this challenge, I did basically do that, right? My thesis was always that time in the market beats timing the market. And while that thesis is still correct, you do have to apply it to the right stocks, in the sense of, time in the market with something that's going to zero is definitely not better than time in the market, right? Ultimately, if you're going to be trading stocks where they're going to burst, then, it's going to blow up in your face one way or the other. And, I'm definitely paying for that here. Connell, it's been different, right? The ride with Connell, it hasn't bothered me at all, truthfully, just because crypto was always my main focus. But once you start getting involved in industries you don't even fully understand, you're not doing the proper diligence, then you get yourself in a position where you're really unhappy. Like the 5,000 that's involved with RGTI, to me, is a lot more painful than the 20,000 with Connell, because with Connell, at least I've been researching crypto for years, looking into Coinbase as an investment. Yes, it's a 2x, and yes, the decay might play a role, but at the same time, with rolling options, in my opinion, it'll allow me to hopefully offset the decay, is what my intentions are, because I'm not afraid to necessarily roll the Connell position another month. Matter of fact, I'm perfectly fine with it. But yes, with RGTI, it's something where, I definitely won't roll, definitely shouldn't roll. If anything, I'll consider running the wheel just to get some of the money back. But this can easily go to $2 at this point, and that's just, it is what it is at this point. I'm paying the price. I'm ultimately down, 2,400 already. And obviously, for the possibility of recouping funds this week is the only reason why I'm still in the position, because, it gets to a point where your sunk cost and your opportunity cost are two different things, right? When so much is lost and your sunk cost is at a certain point, in a lot of ways, you're better off just staying, right? I'll give you an example. If you had, let's just say, 100K in a crypto and it was down to the point where you're at 10K, and it's one of those higher level, bigger market cap coins, yes, you could possibly take that 10K out and reinvest it, but a lot of people would probably just say, you know what, I'll just let the 10K run and maybe it'll recover. And a lot of times it does, right? A lot of times it won't, but a lot of times it does. And ultimately, the pain of if it recovers without you will be worse than if you just left the 10K in there at that point. So that's kind of where I'm at with RGTI, is I don't want to be in this trade forever. I don't want to run it to the stock going to zero. I don't necessarily think this stock will go to zero, and that's the other thing. Obviously, $2 would still be terrible, but I'm definitely at that point now where the sunk cost is so much that I kind of just want to see what happens and see if it can recover before just pulling the plug immediately. I had opportunities to pull the plug at break even profit, and I didn't. And I'm just paying the price. So the ultimate lesson, right, is if you want to hold the philosophy that I've held, which is you don't want to time the market, you just want to collect income, it really will absolutely matter on which stocks you're doing, which, tickers you're looking at, which industries you're looking at. And ultimately, I do think for the average person, indexes is going to be the way. So it's obviously, if you want extra leverage, TQQQ is definitely probably the number one endorsement I can make for if you want a leveraged index, because obviously, as you see, trading a leverage stock, trading something that boomed, right? Like you look at the RGTI chart and it's like, it was never a healthy chart. When I was looking at it, right, what I saw was simply something super bullish, something retracing. Ultimately, I thought that the 16 strike price would be fine. Obviously, this happening, it just is what it is. To sit here and cry about it, cry over spilt milk, that I'm not going to do. I made a mistake, and I wouldn't even necessarily, I guess I would call it a mistake. Honestly, the only mistake I can say I made, truthfully, is that I put in 4 contracts instead of 1. And that's really what it's going to come down to moving forward is like, majority of my account will have to be for safer plays like TQQ, like IBIT, but I can put a small amount into plays like this. Because if I did put 1 contract, I'd be down a few $100s, 500, whatever it is. And I really wouldn't be so devastated right now. Obviously when it's 4x that, or it just gets to the point where it does become more emotional. Like people want to say the dollar amount doesn't make them emotional, but the dollar amount is 100% linked to the emotion, and that is for every single human being. There's not a single person who a dollar amount wouldn't be emotional, right? Like obviously if you look at the richest people in the world, Elon Musk, maybe it would have to be his entire net worth. But, to say that if anyone didn't have their entire net worth involved. Now, obviously, this isn't my entire net worth, but I'm really treating this account very seriously. So knowing that I put, 6,000 when the account itself was only at 26,000, obviously now it's at 18,700, it does start to hit and wear on you emotionally, right? So if it was 600 as opposed to 6,000, it just wouldn't. And that's why it's like, it doesn't mean you shouldn't trade at all, but you should trade for a size that, one thing he says in the Axioms is you need to play for meaningful stakes. That's what it comes down to, right? Like obviously in this case, I'm still relatively a beginner in the option selling world, not necessarily the markets world, but enough to make mistakes that definitely look like beginner mistakes. And I've noticed that in a lot of people, a lot of even very successful traders, is they still end up making some mistakes that you could watch it live and say, wow, like, how does an expert make it? And that's just because there's so much information in the markets that really any person can, miss certain things. If you're not, the trading is a very much a what have you done for me lately game, right? So it's like, just because you were on your A game for a year straight does not even mean you're going to be on your A game tomorrow, right? Just because you've been hot does not mean anything. And that's kind of what led to us here, right? Is I was obviously in a position where it felt like everything I was touching was turning to gold, right? I started this account. Within 40 days, it was at, up $5,200. Now, ultimately, if I do want to be safer and play TQQQ or IBIT, I'm not going to get $5,000 in 40 days collecting premium. It'll probably be closer to like, 1,200 to 14 at this account size, obviously. Of course, the wheel strategy will make it possible to make even more, assuming you get assigned and, then run it up a little bit, then sell calls. So there are a lot of ways to still get great gains. But ultimately, I don't think the answer is necessarily not doing any small stocks whatsoever. But the account size and the position sizing is still beyond out of whack. Like it's crazy to think that RGTI going 4 and it being 6,400 was actually small, because obviously this Connell is 20,000. So I definitely noticed that, like, is Connell and RGTI the problem? Am I the problem? The answer is definitely a little bit of both, right? Like these are very risky endeavors, and I'm the one just doing it carelessly and what seems recklessly. So ultimately, in terms of the mistake to make, right, in terms of how to actually be successful selling options, is really going to have to be, putting majority of your money into indexes or just stocks that you can 100% look yourself in the mirror, sleep at night, while, if you want to take very small amounts, maybe 20-30% of your portfolio at best, into these riskier plays, then so be it. But obviously 100% in, it's crazy talk. And listen, there are people that commented saying I was going to lose it all in, a couple months. And in my head, I was like, you know what? Even with some of these positions, specifically this Connell one, if it did keep going lower and lower and I was able to keep rolling, I do still believe that would be something that would ultimately make this account grow the fastest. Like hypothetically, if it got from, like, obviously I was able to get from 55 to 50. At this moment, I can roll down to 47 and still collect a credit. Still collect a credit, or I could even go a little lower and collect or pay a debit, which to me, this would still be worth it, obviously. Sacrificing 200 to have a $45 entry. Now, with that being said, when Connell was when Connell was retracing, I was able to get, so I remember when it was actually all the way up to here, I could have rolled all the way down to like 41, 42 and still collected a credit. Obviously now I would have to go from 47. So that's a huge difference, right? The fact that instead of being able to roll all the way down here while collecting a credit, now it would be up here. It just goes to show if you are in a pickle and you get something like this, the smart thing really is to just roll again while it's up so much, because you'll be able to get so much lower. Obviously it's easy to get cocky and just assume it's going to keep flying. But, looking back at it, I remember playing with the idea and I didn't do it. And it's just something to consider, right? If you're deep in the money and you want an opportunity to roll, it's going to be, maybe after it sweeps some sort of high, like this right here. This is definitely a resting liquidity. You can call it what you want. This is definitely a zone. And it's interesting, right? When the zone just becomes, two different levels. But yeah, no, this would have been a great time to roll. It would have been a very smart time. Now, ultimately, yes, this does look like it could be double bottoming. Same with Bitcoin, right? I still have Bitcoin like this. If it breaks below this demand, then we'll probably retest these levels. But ultimately, at this moment, I'm still not even bearish on crypto. Obviously, the volatility is just part of the game. So that's where I'm at. I hope you're able to learn from my mistakes. If you've made the mistakes I've made, I hope you've learned from your own mistakes. And if you haven't, again, I hope you learned from mine. I hope you enjoyed this video. Hope you're having a great weekend. I'll see you guys tomorrow for the next video, and let's get ready to have a great upcoming week.